Alright guys, so I have been asked the question, what is the wrong time to sell a cash secured put? When not to sell a cash secured put? And first of all, we need to understand the mechanics of a cash secured put. So we possibly want to buy 100 shares of a company or of a ETF like this one right here. I'm going to give you guys an example on XLE ETF. So our intention is we want to possibly buy this stock or this ETF. If it ever drops to a certain price level, of course, we want to buy at a major support level, which is lower than the current price. And there is a few metrics and a few situations when you should not sell a cash secured put, because we want to make sure that we are selling that cash secured put on a major support level where we really want to pick up 100 shares of that company. And while doing that, we want to get paid a massive premium to generate a monthly cash flow. So, number one, what is very important, as you guys can see, I have marked the support level and the resistance level right here. And what is very important is you want to be as close as possible to the support level and have more upside to your resistance level. And if we check this right here, we have somewhere around a 10% downside in this case to our support level, but we only have a 6% upside to our resistance level. So you have less upside than possible downside if the price decides to return to its support level. So that is number one. Number two is going to be you want to make sure that you're timing this right. So you want XLE to have a red day, you want XLE to go down, because this is going to cause the implied volatility to spike, and therefore you are going to receive a much more meaningful premium. So it makes a huge difference if you would have sold your cash secured put on a red day, like these ones right here, or if you would have sold your cash secured put on a green day, like this one right here. Even if they are nearly on the exact same price level, it still makes a huge difference of how big your premium is going to be that you will receive. Because on a red day, the implied volatility is going to spike. The market has fear. The market is afraid that this stock is going to drop. But on a green day, the market is quite optimistic that this stock is going to rise. So therefore, your premium is going to be much smaller and you're not getting paid as much. So rule number 3 is going to be you want the RSI to be sitting at a neutral level or even at an oversold level. So everything that is at a RSI maximum at 50 or even lower is a good time to sell a cash secured put. But everything with a RSI above 50 and especially above 70 is not a good time to sell a cash secured put on a stock, because that stock at the moment is massively overbought and is most likely going to return again. So first of all, you are going to receive a smaller premium, and second of all, it is most likely that the stock is going to turn around and it is going to go right through your strike price. That's why I always say make sure that you are selling it on a major support level. So here you have it, guys. Make sure to pay attention to these rules, because people always ask me, when can I sell the cash secured put? And I always say, mechanically, you can sell it whenever you want to. But in this video, I wanted to show you guys when not to sell it, because that you're able to do it and that you're going to receive some premium, that is for sure. But we want to sell a cash secured put at the right time on the right ticker. So guys, if you're interested in my strategy, the premium cycle, if you want to generate a safe passive income, then subscribe to this channel and leave a comment, guys. I would really appreciate that. Also, you can check out my free course. Click the link in the description box of this video and check out my course. It is completely for free for you guys, and it will give you a more advanced understanding of my strategy, the premium cycle. See you guys there.